Today we talk with a trader about when to not stick to the trading plan. Hi, I'm Jeff Holden, head of recruiting at S&B Capital, a proprietary trading firm located in Midtown Manhattan, trading equities, options, futures, and crypto as automated and discretionary traders. 90% of the time, it's important to execute your trading plan. Executing your trading plan will allow you to determine if what you are doing, if the decisions you are making on a consistent basis will lead to good trading results. This video is an example of when you should not do that. Tell us who you are and we'll get into your playbook.
Okay, so my name is Andrew Souza. I'm an intern here at SMB. I have been trading for a very short period, about 4 months now, actually day trading. But as far as being involved in the markets, I've always had a passion for the markets. When I was a kid, I used to go and get the New York Times and look at the back of the magazine where the charts were and the market news and stuff. But very new to day trading and happy to be here at S&B Capital.
Yep, great. And in a previous life, you were
I used to play professional soccer. Got drafted out of college and then played pro for 5-6 years. Had some very unfortunate injuries. I decided to call it quits early and started looking for a new passion, and then was introduced to trading by a trader here at SMB. And then I just fell in love with it and looking to make a career out of it.
So although you've been focused for that last 4 months, you've been around it for a while. So I'm excited to do the playbook with you. This one is one we talked about before. You know, the focus here is going to be more on execution than on idea generation. Sometimes we talk about idea generation. It's obviously a huge part of what we do here. I think the part that's interesting is I want you to go through the idea generation part of it, but then we'll talk more about the execution and the different ways that you can execute within this. Because I got a glance at it and I thought you did a good job of the idea generation, but the execution in a setup like this becomes really important. So go ahead.
All right. So this playbook trade is going to be a changing fundamentals trade on FDX. And like I told you, I was excited about this trade because I wanted to add one of these to my playbook, and then this opportunity presented itself. So.
And by one of these, you mean a long trade.
Yeah.
We talk so much about short trading on the desk. A long trade is a good thing to have in your playbook.
So as far as technology, I use market views. I have ticks windows with up-to-date news. Any important news that hits in the last minute pops up in red, and also ticks windows with halts. SMB scanners, SMB radar, alerts. I set alerts at prices that would interest me.
Yep.
Scripts, I have an RVOL script and a percent gainer scripts that tell me what is doing the most RVOL with the percent increase and decrease. I record my screens so I can go back and look at film, as if you were an athlete, and go over the trades. And then trader view, I use that to track the trades that I make, and it's a good database for seeing.
What did you call this trade in your trader view? I'm just curious what you tagged it as. Do you remember?
I don't.
Okay.
I believe I think I put a changing fundamentals long, maybe.
Yeah. Because some people do that. They tag long versus short, and so at the end of a 3-month period, 6-month period, year, they can actually see it.
I actually did put momentum scalp as well.
Okay. Yeah, and that's a good one too. But it's sort of, we're trading in June of 2022, and we're potentially seeing a shift in the market regime as of Friday. But we probably are still we're definitely in a bigger picture downtrend, but we're probably still in a market where you can sell most pops. So respecting, when you tag trades as longs, you can go back and identify in that market regime how well did this trade work.
Yeah.
And you actually start to build this weird database in your mind of in this regime, I know I trade this better. In this regime, I know I'm looking for this with more specificity. Why I think that's important is it comes down to the way that you will execute a little differently. particularly how aggressive or how passive you need to be with
That's
your
a great point,
execution.
because obviously with the market conditions and everything else going on is how you're going to execute on the trade.
Yeah.
So putting that, tag there will differentiate, what the conditions were.
Because
at
this
the time
trade
of
in a
trade.
different tape, you could be way more passive,
yeah.
or you could have to be way more aggressive
Yeah.
even. So that's why I think it's important. It's not just the was I up in the trade, was I down in the trade, am I making money here, am I not? It's really thinking about who you're going to be as a trader in 5 years and how you're going to be able to use that information moving forward.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
A little bit of background. The new CEO had already announced a 53% increase in the dividend. They're gaining income from surcharges and better logistics. And they have a share buyback that's, it's only a small share buyback compared to the overall picture, but, that could be bullish. They have a narrow earnings miss, which in this market is a positive. Revenue growth growing tremendously, net income growing rapidly relative to its peers, positive forward guidance, which is another really good catalyst in this market, and full year forecast exceeds estimates.
Because most companies, we haven't seen that at all. We're in a period of inflation, we're in a period of rising transportation costs. Most companies, particularly a company like this, you would almost expect them to be forecasting a lot of uncertainty, but they're saying, no, we expect our business to grow and our revenue to grow and our,
Which was kind of weird, because all the talk is that things are going to slow down.
Correct.
People are probably not going to buy more stuff.
Correct.
Less packages and all that.
Correct.
It was.
So it'll either be very right or very wrong in a year, but we'll see.
Yeah. So the bigger picture here is the SPY and XLI. XLI is the industrials, which FedEx composes the most of. So as you can see.
Do you know the percentage?
6%.
6, okay.
Yeah. I think they're the
holding.
highest. Yeah.
Okay, gotcha.
The SPY, obviously, like we were talking about, in a downtrend, but seems like we've made a temporary bottom, and XLI as well. The VIX in a short-term downtrend, the SPY gapped up on Friday.
Yep.
It's trending up this week, and on the hourly or 30-minute chart, it seemed to be forming a cup and handle.
What's interesting about the VIX is, to put some context behind it, it's downtrending, even though it doesn't feel like the VIX should be downtrending. As traders, we feel like we're on the edge of we're going to come in one day, we're going to be down 10 handles and a gap, and we're going to keep selling off. And particularly going into Friday, it didn't feel like the VIX was downtrending. It didn't feel like it should be downtrending.
Yeah.
So it's very interesting that you put that up there. I like that. Yeah.
The intraday fundamentals, FedEx net income grew by 24% in third quarter 2020, year on year, above the company average. Transport and logistics industry recorded growth of revenues by 16%. Looking into FedEx growth rates, revenue grew by 9.91% in third quarter 2020 from the same time a year ago, which I found that interesting because COVID was 2020. 2021, I thought we would see the most growth and see things start to slow down now.
Yeah.
The short flow is 1.73%, so
Not at all.
not at all. The ATR is this is updated after.
Okay.
This was Friday night, so the ATR before this move, I think, was in the 8s somewhere, and the average volume is 2.52 million. So it gapped up 3% on the earnings. The R-vol was about 5, so check.
Yep.
The two cautions that I had were, this is historically not a clean trader. Trades with a bigger spread, and the pre-market volume in the morning was not something to brag about, as I put it, but it was not ideal to what I would want to see.
And why we worry about that is because it's information, right? If it's not, it's like if you sit down to a poker table and you can't see how big anybody's stacks are. You're really not sure who's doing what and how they're doing what.
Exactly,
So you really have to be very careful and be more comfortable just listening for the first little bit.
Yep. So FDX, this was one of the reasons why I like this trade. It was above all the moving averages. That you can ignore the last bar there because that is Friday, but it gapped up and was above the 200-day, the 50-day, and the 20-day moving average. The 4-day range on the hourly was between 225 and 231, and the daily volume, as you can see, was picking up, and it closed strong on Thursday and went up 3% after earnings. So my trade strategy, like we talked about, was to be a momentum scalp. We had a meeting with Dr. S, and he talked about how funds were making a ton of money scalping in this market or just playing ranges, and other traders, where we have the advantage and the way we should be trading is that way. So I was looking at everything and taking in all that information, and I also thought about when do I feel good in a trade is when I cash, hit the register, and making money and taking some off early in the trade. So that's why I had that idea is, okay, I'm going to momentum scalp this off the open. If it's going to work out, people are going to be super bullish on this trade. It's going to work out. It's going to really get a lot of momentum off the open, and I can use that to my advantage. So, and a possible adjustment to the trade would be holding a third for a trend higher.
Yeah, I mean, we'll get into it when we start to execute, but we have talked a lot about how important momentum scalping is on the desk in this tape because, and people define momentum scalping different ways. I mean, it sounds like you're defining it as 10, 15 minutes, something like that. Mm-hmm. So it's not a true scalp, but it's not like a trade to hold, which is an hour, 2 hours, right? So particularly on the open, momentum scalping is kind of what you do on the open for the most part. But once we get into it, it'll be interesting to talk about, is this a trade that converts into something else, or is it a trade that actually you had a really good momentum scalp and then a different trade set up? Because that can happen a lot of times. And a lot of times it's easy to lump it in as one and be like, oh, I should have done this. Mm-hmm. We'll have to look at the chart and actually talk through exactly what we needed to do.
Yeah, so XLI was something I was watching as well.
Yep.
It had a 20% pullback of its ATR.
Yep.
And as it was pulling back,
did it break? I mean, we were talking about the opening low. Did it break the opening low?
It didn't break the opening low.
So, what was really happening in XLI?
Yeah, it was just a normal
consolidation, showing actual real strength. So,
this was definitely one of my triggers that made me decide to get out of this trade a little bit earlier than I should have. But cement this pattern, that 20% pullback of an ATR in your brain, because there are so many times when, as traders, you get long something and you get that exact pattern where it dumps out and you're like, oh boy. Yeah.
Because if it keeps going, it's just going to keep going.
Yeah.
And it doesn't keep going. Yeah. And that winds up, look how clean that opportunity was, even in just XLI. Mm-hmm. Forget the FDX trade. But that sort of thing, that feeling in the pit of your stomach, the intensity of that dropout, just remember those, because sometimes that winds up being your best friend.
Yeah.
But it is tough. It's really tough in the moment, and you have to control your risk, because if the buyers don't step back in,
it's going.
It's going. Yep.
And I have the pre-market on in FDX on the 1 minute chart, because that's what I started to see.
Yep.
Was the volume picking up pre-market? Price was coming up, and I said to myself, I want to get in a little feeler position early.
Yep.
To potentially catch even more of a move.
Yep.
And
what's the volume? The average volume in this 2.9 million.
2.9 million. Yeah. So
if you go back really quickly, it looks like it did, more than half that.
It was doing 12 on the open. It was doing 12 RVOL.
12 RVOL is insane.
Yeah.
Right, for a stock like this. This isn't like a low float. This is 12 is probably in the upper 2% of it. So
And that was also my reaction when it opened. The force in the move, I was like, whoa.
Yes.
And usually when I get that whoa is when I start to take stuff off in a trade.
Correct.
Like normally when you have a stock trending up, you're never saying to yourself like, oh my God, like look at this. And
Correct.
then, it's kind of a trigger for me to like say, oh, let me take some off.
And why is it a trigger for you to take some off? Like, let's talk about why you usually have to take some off in that.
I think you're going to get some type of pullback if once you have the speed on the tape is
Correct.
fast, the volume is tremendous,
like,
you're going to have a pullback.
Usually that's the case, but this is right off the open, right?
Yeah.
So this is initiative buying.
Yeah.
If you got that after 11 o'clock,
Yep.
you better be out of a lot of your position. Right on the open, you think about all the people that aren't us as traders and all the funds and stuff like that, and they think about a momentum scalp as the first hour and a half, 2 hours, right?
Yeah.
So like when you see that, it's certainly not day traders pushing this stock up. So it's sort of understanding the context of when that whoa should be I need to manage my risk, and when that whoa should be like all right, now it's really time to go.
Yeah, and that's a great point. I definitely didn't think about that when I was in the trade.
Yeah, because you're just like yeah,
and like everything's just happening so fast in that moment. And that comes with experience.
Yeah.
All right, so right now it's 9:28. So I already had my position here.
Yep.
At 235.75.
Where would your stop be?
My stop was the bottom of. This isn't
Yeah,
working.
it's tough to, like, so.
My stop was the low.
Yeah, are you small enough there that you're just like, because like the reality is you're not going to get that low, right? Like if it's going to go down, it's going to go down a lot more.
Yeah, I had
percentage of your total position.
This is why like you were talking about the execution. So like I had a feeler position here.
Yep.
And it was like not even 5% of my daily stop.
Yep.
Where in this trade you want to be like eventually like 30-40%.
You want to find ways to be. Yeah.
So, this is why it ended up being a great trade, a good trade. It could have been a great trade. Like this is a trade that can make your month. So right now we're at 9:29, right before the open.
And this also occurred on a Russell imbalance, or rebalance day.
So right there we just opened.
Yep.
And we got a $1 move off the open.
Yep. But like I'm guessing the window on the right is
This
the
is
time
the
in
time
sales.
in sales.
Look how slow it is, right?
So we
it's like,
had watching this back was pretty insane because we just stopped, and I don't.
It wasn't open yet. So like the reason why you stop is it's not open yet. So like now it's actually open. So 9:30 is not the open.
Oh.
So like this they needed somebody to open it. So now it's actually open. So you can trade it pre-open. Like you can trade it after 9:30 to the open, but until the opening print happens, you don't really you won't see any volume.
Yeah.
What's interesting is like I see, and it's tough to tell without the bid and the ask, but like they tried to drop it out.
Yeah.
And the amount of volume is actually really good. So.
Yeah, and then we just explode.
Yeah. But again, put it in context. Like you feel like we explode, we're up $2, right?
Mm-hmm.
What percentage of an ATR is that?
Yeah, it's nothing. So
it's like 25%.
Yeah,
so it feels like now we're up $3. So that's 30%, 35%. So it's like it feels like it's happening so fast and it's going up so much, but relative to what it could do, it's kind of like it can still go a really long way.
So here is where I took off a third.
Yeah. Because it feels like it could pull back, right? And how many times have you been in stuff and it pulls back off of that?
So this is 9:31.
Yep.
And at 9:32, XLA starts to kind of top out.
Yep. I'm just amazed at how fast the time and sales is. Like on the right, like that is just, for a stock like this, that's very fast. But you also saw it fail above 240, so it's like, maybe it keeps going up a little bit, but like, a lot of people are doing what you did, which is they're just taking profits at 240. Yep. You can see the sizes increase above 240, and it probably goes higher based on just the speed alone and the fact the volume is so sustaining.
This candle here, I
Yep.
think it's right about now, we get a huge...
Yeah, you get a whoosh, right? Yeah, so you saw the sellers at 240, so you see it keep going up, but like you almost have to expect that like rug pull-ish type action, right? So like from this perspective, the momentum, so the dots are, perfect, okay. So you're doing the right thing with taking some off there because, you're seeing the selling, or at least you're seeing some kind of perspective that we could sell, and now it is an extended move because we're actually up 236 to 242. It's what, $6? That's like 75% of an ATR.
228.
Yeah, but you can't worry about that because of the volume, like in this specific circumstance, because of the volume, because of the setup. But you can say we're up like 2/3 an ATR in a very fast way.
Yeah. Like
I need to be taking profits.
And this volume here is...
It's good though. That's kind of what you want to see though. Yeah. That's the thing. If so I think the opening momentum scalp is the right trade.
Yeah.
Now it's just what you do after the fact that matters so much.
Ideally, what I wanted to do here was, I didn't even think about this feeler position until I started to see like price coming up and some volume coming in pre-market. So I'm like, okay, let me get a little bit here, and then off the opening print, I want to add to that position.
Yeah, I mean, I think that's a really good momentum trade. If you're going to momentum trade it, you can do that, right? But if it drops out, you got to be out.
Yeah.
And it's again talking about like the causation or whatever the term is. It's like, are we saying that because it's a really good trade and because it worked out and because it would feel nice and good to have more size, or are we saying that because that's actually the right thing to do in this circumstance? Mm-hmm. And actually the right thing to do in this circumstance is probably something in between. It is the right thing to buy more, especially if you just have a feeler on, if you can see something on the tape that makes you feel like I have a level to risk against.
And then the other thing is, it never really gave me a reason to get out of my whole position.
Correct. That's going to be the bigger thing.
That's really, the part after I look back at this trade, it's like, okay, 1/3.
I mean, right there though, right now, like look at the volume on that last up bar. That's a reason to sell.
That's where you want to get
that's
out.
Your first that's your first real reason to sell that's not potentially tape, right? Yeah. Like the volume's up, or the volume's down a ton, and XLI is pulling back at this point, you said.
Yep.
And like it's a relatively unsustainable move to the upside in such a short period of time.
Yep.
That's the first time I'm like, that's a real reason to sell. The other ones are like, you take it because it feels good. Like that's a real reason to sell though.
Yeah.
A real reason to lighten up your position at least.
And that was like the first time we actually see some red on the here.
Yeah. And like Lance talked about it in the meeting, you can honestly move your stop up. If you take this momentum trade, a great way to momentum trade is you move your stop up to the low of the prior bar, all the way up, right? So now your stop is at the low of...
Here?
No, because you have another bar that formed. Okay. So then that's like your low of that. Could be, if you're truly momentum trading it, right? You're just waiting for the momentum to die. So you move your stop up to the low of whatever bar is just before it. And eventually, the thing that you don't want to do in this circumstance is look for reasons to sell. You want the reasons to sell to just be presented to you. If you do that, you have to be comfortable knowing that I'm going to get stopped out at some point. And then you can't like revenge trade it if it doesn't, if it stops you out and then keeps going. But that's another way to execute the same trade. Is okay, my stop's this low, now it's this low, now it's this low, or you can
and I think
use a moving average.
And if you're talking about momentum trade, you want to take the max size at the beginning.
Yeah, but that's like you don't have enough information
Yeah.
there, right? You need to take the max size as soon as you see something on the tape that gives you, like after the open, as soon as you have volume, like that's when you could actually size in. Like, because that's a breakout trade, but it's a pre-market breakout trade into an imbalance open, which is like, that's very little information. So this is the first time you would actually
Get a pullback.
be stopped out of your position too if you're using the 1 minute low stops, right? This is the first time we've traded below the prior low of a 1 minute bar. So that's one way to trade momentum. I'm not of the belief that there's a right and a wrong way to trade stuff. There's just a way that makes sense to you. And if the 1 minute low is one, then you've held your entire position until now. You take a stop on probably half or all of it, depending on your conviction on the trade. But if it's a momentum breakout, or if it's a momentum trade, you're out of all your position because the momentum died. And then you're evaluating what comes next. You also happen to get almost an ATR move, but it's sort of like a weird trade at this point, because if XLI is still not showing strength, like you expect a pullback here, but where are you going to buy into the pullback?
Yep.
And you're not actually making a momentum trade now because you're getting a
different
pullback.
trade,
It's a totally different trade. But for the trade right on the open, and you can just pause the tape for now, but for the trade right on the open, let's come up with some better execution rules. I mean, first of all, instead of selling your position, what do you want to be doing when you feel that, like, whoa?
As far as,
like, instead of selling that, like that dot.
the red one.
Yeah, the first red one.
Yeah.
Maybe that should be a green dot. Maybe you should be buying more there,
Yeah.
right? Like, so if you're flipping it around and you're actually getting everything that you think you need to see, it's a very uncomfortable thing to do.
Yeah.
And it's not a very rational thing to do.
Well, that's something I'm not good at, is buying up.
Correct. Exactly. So like that is something where you might just know that about your trading. But if you're not good at buying up, that also means you shouldn't sell just to do something.
Yeah.
So, it doesn't necessarily mean you have to be buying up, but there are some traders who are very, very good at those rare circumstances, that one trade out of a week, one trade out of a month, where they're like, it makes sense to buy up, right?
And then my whole thought process is always like, if I get 3-1 or 5-1, I'm gonna take some off. And there I was 5-1. I'm gonna take off third. But again, like you said, understanding the situation.
The situation dictates that, because what if this was a 10-1 or 21? What if this just ran all day and then all of a sudden you're sitting there, you're the guy that sold.
You sold 3-1.
You sold 3-1 and it goes 30-1 and you're just like, what did I do?
Yeah.
So that's where, like, all of those things that you talked about are good basic thought processes to have. And 80% of the time, they will keep you in the right position and keep you in the right thinking. What we're talking about today is one of those opportunities that is not 80% of the time. It's probably not even 90% of the time. This is probably like 5% of the time 5%. You get this to happen. Maybe one trade out of a week you get this, but...
And I should have known that just by the feeling when I was in the
feeling.
trade.
That's what we were going to talk about, is the feeling, right?
That's a feeling that you get very rarely.
Correct.
Yeah, so like something obviously is making you feel that way.
Correct.
So you should.
How can I use that information versus being very static with my plan? Yeah. And that's a part of what I feel like reading the tape can be a huge source of edge with is. And you obviously have the other tape, but you got the other one, so that's good. But even just watching the time and sales and like the volume and the speed and the aggression and they sold it at 240. Well, they should drop it out there. Well, they didn't, right? Yeah. Like all those little things, when you combine all those, that gives you that feeling. Yeah. That feeling isn't like, oh, I hope it goes up. That feeling is like, this is not doing what most stocks do. Mm-hmm. And when you feel that, if you're short, that means you just want to be hands off. And if you're long, that means you just want to be hands off or looking for chances to get bigger. Yeah. You want to wait for a real reason to sell. I would argue the first real reason to sell was that low volume bar on the 1 minute at that extension. Like like that, whatever, 1, 2, 3, 4, 5, fifth bar in. Because like when the volume goes away in a momentum trade, it's either going to pull back or it's going to consolidate. If it keeps extending, you're probably going to want to short it anyway because it's just not sustainable.
Yeah. I would agree with that for sure.
But immediately, given the feeling that you had, your thought process should be, what are the next set of trades that could occur? You should be, obviously not taking profit as quickly, but then what are the next set of trades that could occur in this stock? And that's, a later in the day thing. But yeah, I think for an opening drive momentum trade, I think if you know your personality, if you're like, I can't add there, it would make me so uncomfortable, then just don't sell. Just hold.
That's a very good way to look at it.
It's just a different way of looking at it, is because when you feel it, it's just like, it like puts a pit in my stomach, like seeing you sell there, because I'm like, you're like selling when you know you should, you're doing it to do something, right? That's all you're doing is doing it to do something.
I got to do the right thing.
I got to do something, and like that's the thing, like you sometimes you just
don't have to do anything.
You're right. You're in the right position, and the thing you can do best is just not do anything.
Yeah, walk away.
I wouldn't walk away because then it'll come back. But don't wait till there is something to do.
Yeah.
And sometimes that means a stock is really choppy and there is nothing to do. There is no trades to be had in it. So you just wait till there's something to do. Sometimes you're in a trade and it works. You just wait till there's something to do. Sometimes you're in a trade and it's not working, but it's not really not working. It's just kind of like playing with you a little bit. Like, wait until there's something to do and then act.
And that goes back to what I mentioned to you this morning, is like, I want to be busy all the time.
Correct.
So it's like, okay, just maybe relax.
And we're not talking about all the time. We're talking about that 5% of time when there's nothing to do.
Yeah.
95% of the time there is something to do, and as a trader, having fast hands and busy hands is a really good thing because you're probably not missing other opportunities. But that 5% of the time, man, that could be 80% of your month. That could be 90% of your month. Like that could be, they're probably going to be 10 days out of 252 trading days that will make most of my year.
Yeah.
And I think that's pretty consistent with a lot of us. But, it doesn't mean we're trying to not trade all day, every day, the other days. It just means we accept that. So it's awesome that you were in this trade and you got that feeling. Now the next thing is, okay, what are you gonna do next time you get this feeling, right? And even just knowing, like, all right, I can sit, and like we're talking about a 5-minute period, right? Like it's
like 3 hours.
It's not like 3 hours. It's pretty fast. But I totally understand what you're saying. It feels really fast, right?
Yeah.
It feels disturbingly fast, but it's really 5 minutes. So no, I think it's good overall. Yeah. What else do you have?
So the trade management, where would you add size? And after I reevaluated it, I'd like to add more size right off the opening rip. Recalculating my risk reward and adding appropriate size would have been more beneficial for me to get creative with my exits and push for more profit. This would be a different, like you were saying, it'd be a different trade than momentum scalp. My initial stop was 235.40. I didn't adjust it because I was momentum scalping, so any pullback I was getting out, but didn't get a pullback, I still got out. And I took profits at 237.50 and 241. Yep. What did you learn from this trade? I learned that in a market that is not performing so well, multiple checks in your favor can be a good recipe for a great trade. I will add in all the market conditions as Playbook, specifically in an oversold market with every single stock is strong off the open. That's something we didn't discuss either. Like everything was going up.
That's something where when you feel everything else is going up and then you feel that, you're just like, okay, I really need to.
Yeah. I could have added more size in the open. It's a great set of multiple checks in my favor. The only downside is not a clean trader historically, but all positive catalysts, taking 50% of your stop in this trade would have been ideal. This would allow me to keep 1/3 of my size and having trailing stop at any lower highs, maximizing my profit.
I disagree with your what would you do differently next time on the trade. I think for the momentum trade, you made a really good trade. Or you have to break this out into the momentum opening drive trade and then the rest of the day trade. because you could have made another $4, but you also could have made another $8 by buying the pullback, or $6 by buying the pullback, and you could have done it without just, holding size, right? By actually resetting and
two
doing
different trades.
Yep, exactly. And that's something that sometimes is tough to do, particularly when you just had a momentum move. But you want to develop either I am in this trade for a bigger move and I know I'm going to hold some, or I'm momentum trading this, I'm out of my momentum trade and I'm immediately resetting to think about how could I get a trend trade on. Because they are different trades with different risk management, and they are totally different approaches to the way that you're taking profits. Because you can't take profits in the same way on a trade to hold or like a trend trade. You just won't get that opportunity. So, yeah, I agree. I do think though there's huge potential to grow your P&L in this trade for sure. I just think if you're gonna get, it's tougher. It's easier to get caught in between. This is a momentum trade, but look how far it went, and I should have just held. And this is a momentum trade. I'm taking profits at the right point, and then it comes all the way back, and I give up that 20% or whatever. Like it's that causation thing.
As two different trades.
Yeah, I believe so. Yeah. In this circumstance, I think it's the right thing to do. So let's go through the scorecard. Stock selection, I gave you a 9. I think you picked a good stock for this setup. I think you could apply this setup in a handful of different stocks and have a very similar, if not better, outcome. So the same setup of it was a little bit relatively strong to the indices, to its peers. It was a little bit relatively strong to the market. I guess a lot relatively strong to the market, but it had a really interestingly positive catalyst. You put that same set of criteria with a different stock, and it probably actually gives you a little more. Plus, it's probably not a stock that touches so many prices and can be really wicky. So that was 9. Big picture, I gave you a 10. I like the fact that you talked about kind of the downtrend we're in, the market environment, and then the VIX. I thought that was really good too. Trade strategy, I gave you a 9. I think that your initial trade strategy was right. You want to be in pre-open when you see that breakout. You want to manage your risk against essentially that low. You really kind of want to be taking profits at some point on a momentum trade. So I think the trade strategy as a whole is pretty good. Your execution's kind of where I think we'll talk about that in a minute. But intraday fundamentals gave you a 9. I thought that was really good. You picked up on the RVOL was really what it was. You can get more granular with your intraday fundamentals. You can say it's moving this on a 9 EMA, it's doing this above VWAP, but you picked up on the important ones, so that was really good. Technical analysis, I gave you a 9. I thought that was really good on the higher time frame above the 200 MA and stuff like that. Reading the tape, I'm gonna have to give you an 8 on it, or 7, because of the fact that on the open, if you're gonna take that open, it has to be sort of a tape trade. It has to be sort of I see this on the tape if you're going to add, right? So that's the one part. And then also when you're taking profits, you want to do it using tape as much as you can. The fact that you caught a lot of that move was really good, and you were recognizing the speed. And so that's really reading the tape without actually reading the tape. Yeah. So that's why you got a 7 versus less than that. Trade management, I'm going to give you an 8. You did the basics of what you're supposed to do 90% of the time. It's just that feeling thing that you talked about. That's the difference between an 8 and a 10. Like a 10 is, I feel it, I'm changing my trading style accordingly. An 8 is, I'm doing what I'm supposed to do all the time, which you did what you're supposed to do all the time. This is just a rare circumstance, which is kind of fun. Technology, 9. I like the fact that you used your scanners, have alerts and all that stuff. Review, 9, and diligence, I'll give you a 9 out of 10. So that puts you, it gives you an 88, which is a good place to be from a developing trader perspective. And it also gives you some really cool things to work on of if I do this most of the time, you will be on your path to finding a lot of success as a trader. It's really fun to do a playbook like this where you're talking about that 5% of the time. What do you do differently? and really how do you just let yourself get paid.
Yeah.
That's the whole thing. So overall, that was good. Yeah.
Awesome.
Yeah. Thanks.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.